Good evening, everybody. A cold, wet Pittsburgh evening in Pittsburgh. I understand it's even cold in Texas tonight. Okay. Here's the one thing that should stand out. I figured you had a lot of snow there in Denver. I didn't saw the Denver game that field was covered in snow. Here's the one thing that you should always now should be a mental flag. When you see a sell signal and a close below the T-line, figure a downtrend. When you see that sell signal and a close below the T-line, figure a downtrend. So it wouldn't be surprising. I don't know whether this will come. Well, I guess we could draw a trend line. A line. That might be your next target. Kind of this sideways wedge. So, but here's the most important factor. When you see that close below the T-line, immediately you should have set in your mind that things are selling off, or there's more than likely going to be more of a downtrend. So with that, whatever enthusiastic, and I'm saying this because this is the way I always was, whenever you have that enthusiastic hopefulness that things are still going to go up, you still have to be careful that when they're not able to get up above the T-line, and it's not so much the factor that was statistically we can see that they're not back up above the T-line, but it's got an implication that you should always keep in mind, which is if they can't get up through the T-line, there's going to be better prospects that if something negative or the further they head down, the more bearish sentiment is going to be kicking in. So there's just a very simple analysis that if there's bad news when everybody's kind of bearish, it's going to affect it much greater. If there's bearish news in an uptrend, it usually doesn't affect things as much. But that is the indication that that's why the T-line becomes so effective. So today when we recommended Omar, it was on the basis that they failed here at the 50. You're in a downtrend. And if they traded this lower, where was it likely to move? Somewhere down in this range. So that's why you want to see confirmation, because before, this looked so much like a good short, but it opened lower and you could immediately see there was buying. This is what keeps you out of a bad trade. Now, if this had opened up and started trading up, where was a good place to go short? If it came back down through the open, because that would have told you that this was moving in the right direction. When would you do that? When it did it. You weren't executing something that there was something going the opposite direction. So the ones that are trading below the T-line, you just hang on to. Once again, look how the failure up here at the 50, a bearish doji sandwich. How long do you stay short? So you see a buy signal confirmed. BTNX, same scenario. A bearish left-right combo. Now, the reason that's relevant is look what happened over here, a bearish engulfing signal. Took it back up. That was you could look at that two ways. That was profit taking, they're taking it back up. Now you look at it the second way. Another bearish signal, your bearish doji sandwich. So you start adding this up with the fact that you're in the overbought area, you've had a sell signal, now you have another sell signal. That's kind of telling you the message that you want to know if you were long. It's time to get out of this trade and possibly go short. CLSK, they gapped it down. Observe the obvious. They've never been able to get this one back up above the T-line. What is going on over here? That's apparently what was going on. So just the probability factor that if you see selling and it closed below the T-line, the probabilities have just gone against you that you're going this way. You're probably going this way. And even if you're not going in this direction, you might be going in this direction, which means you probably don't want to be here anymore. So when you have a good bullish chart and you get a big bearish signal, take the money and go someplace else that's going to give you better prospects. So on any given day, if you get the confirmation, again, our NK recommendation, open positive, it waffled around. As a matter of fact, it waffled around to the point where it came back down. And then as it started coming back up through the open, that becomes a good entry for two reasons. One, we've got a strong bullish Harami off the 50, gap up through the T-line. What's our implication? The buyers have come in. We can see there's kind of a trend channel. So if they take this down, and the market is as soggy as it was this morning, but then you see them turn around and start buying, when they come back up through the open, that makes for an excellent probability exit or entry point, because it's doing what you would expect it to be doing after the buy signal, and it's coming back up to where it basically tells you the buyers are still there. I'm going to go through these real quick. Lake stayed up above the T-line. Now FireEye had a left-right combo on Friday. That would have told you one or two things. One, you close it out because that's a left-right combo, high probability trade or signal. And two, if it opened lower, or what it needed to do today to stay in it would be that it needed to open positive and trade positive. When it gapped down, there's two reasons you would close it out. First of all, you've got a signal that says a left-right combo. Get ready to close it out on weakness. Number one. Number two, you could see the market was selling off, and this was opening lower. There was two good reasons to be out of this trade. Opening lower after a left-right combo, and the market wasn't going to show very much strength. Even though this closed back up above the T-line, what's it tell us about our strength of this uptrend? It's not going anywhere. Let's go take our money and find something that looks more like this. That was same scenario over here. We'd bought this sector because of the J-hook type pattern, but this told us we should have been out for two reasons or two places, either at the low of the doji or the T-line. And the fact that you could see it was selling off when the market was selling off. So there's a lot of times where if you take that money that is in a good trade and see that the market or the chart is turning sour, close it out. You're better off taking a loss or getting out of a profitable trade quickly than sitting here thinking, all right, what's it going to do now? Maybe it's in an uptrend. Maybe they'll trade it up, but what if it trades sideways for a couple of days? Do I hold on to it? This way you're out of it and you're off finding something that might be a much better situation with much better probabilities of trading higher. Same scenario. Here is one that was setting up because of a very logical situation, meaning a bullish engulfing right off the 50, trying to break out through this level. But the market sold it off. That wasn't anything that made this chart a chart that you shouldn't have been looking at in the first place. It just told you with the market conditions, you can see what the investment decisions were, which was they closed it as a shooting star doji near the lower end of the Friday's trading range. That does not imply very good strength. And if we don't know what the market is going to do from here, bah humbug, it could possibly go down further. Why stay in something where we don't know whether it's a good chart anymore or not, and at the same time know that the a downtrend could continue? It would be much better to take that money and go find a good short position. Still doesn't matter, Jake. The fact that it traded positive on the day or held up, it's still not a good looking chart anymore. Not because of, I mean, you could say, all right, this was good because it held up where it opened on a bad day, but that's not the criteria of where did it close based upon a terrible day. You got to look at this and say, all right, they weren't in here buying, and it could have been because of the market, but why stay in it? Do you know which way this is going to go tomorrow? We don't. Don't know whether it's heading up, heading down, or heading sideways. And look where it closed. It closed near the low end of the previous day's trading. That does not show a good amount of strength or bullish control. So just because it didn't sell off drastically today doesn't mean it made it a good chart. It's still not a chart that has any indication there that the bulls were in control. So that's more of a decision to say this market doesn't look good. So are stocks like Tupperware or anything else that have been acting bullish that are now starting to sell off, are they worth hanging on to because they looked bullish before the market started selling off big today? Well, we got to remember, every chart is the accumulative knowledge of everybody buying and selling during a specific time frame. And part of that information is the fact the market's selling off and they've made their decisions to sell off. That's built into the chart. So you might hope that it might go higher, but you're using the wrong strategy when you're hoping that something's going to happen. So Bed Bath & Beyond hasn't closed below the T-line. But what are our probabilities telling us right now? We're seeing a bunch of dojis hugging the T-line, not going anywhere. What is our risk factor? Once again, we don't know whether it's heading this way, or this way. Let's take that money and go find something where we're not hoping it's going to move one way or the other, and find something that looks more like this. There's nothing wrong with closing out positions, even though they haven't done a confirmation sell. But when the probabilities are starting to go against you, the market's heading down, it might not be closing right below the T-line, but you're starting to see a lot of sell signals. Let's close it out and find a better trade, or maybe a short trade. So we've got shorts that are working. There's your kicker signal to the downside. All you have to do is hang on to this short. Yeah, it closed above the T-line, SP. That's just what I was just saying. Because just because it closed above the T-line doesn't necessarily make it a good chart situation right now. The market's heading down. We don't know whether it's going to continue to go down. This one closed above the T-line. The stochastic's flattening out. and it closed where it opened, right near the low end of yesterday's trading or Friday's trading, that doesn't make it a good chart just because it closed above the T-line. Remember, they opened it here and traded down here. It's not a good chart. Now, if you're holding it and if you're holding it, now you've got another decision to make. If it opens lower, what's it telling us? This downtrend is still in progress. If it opens higher, you can hang on to it and you still put your safety stop at the T-line. Hold on to your individual ones. I've got PER. I think I've got PRPL, maybe not. So same scenario on home. It closed above the T-line. Well, what are its probabilities doing right now? Well, this one, whoops, that's not what I wanted to do. What did I just do? It closed above the T-line. What are your other elements? Stochastics are flat. It opened and closed below previous Friday's open. Is this putting us in a good position? Now, it's kind of telling us we're starting to see some selling up here. And we saw another setup today where it opened below the previous day's open. What else could be happening here? Well, if it opened lower, we've got the prospects of a bearish flutter kicker. There you go, George. Yep, a bearish flutter kicker in progress. So if that's the case, and we're not sure of the market condition, just close it out. If it does something dramatic and heads back up, you can always buy it back. But right now, the market's heading down. It's trading below the T-line on all the indexes. And there's charts that are starting to show weakness. That should be the framework of your analysis or your decision making. That if things don't look very positive and I'm starting to see some weakness in charts, it's not like these are the only charts you have to trade. There's 9,500 charts out there, and right now there's probably 5, 7, 12 good bullish charts, and 5, 10, 12, 15 good bearish charts. So why sit in something that is not showing the confirmation or showing a conviction one way or the other? And I'm saying this because I've learned in the past for myself that if I don't think things are going the right way, go to cash. You might be there for 2 days. You might be there for 2 weeks. But you're now in situations where you're not hoping or pressing something to move in the right direction. On FedEx. All right, I'll get back to it. So here's Wyndham. Again, up here, Doji, gap down, market was opening lower. I would have been taking this off the table just because cash is a position. That's right. What is the question? FedEx, with FedEx, and where the 3 dojis are, what would you make? What would make you stay in or not? These 3 dojis, they hadn't confirmed. That one would have been the one that was telling me we better start watching out, because that's a bearish engulfing signal after 3 decisive trading days. Is that the one you were looking at? But this was telling you, all right, were not bad because it's been above the T line, but there's where you would have closed it out. Okay, let's see. ADNT, same scenario, shooting star, gap up in the overbought condition. What do you want to see happening here? If you're long, you'd better open positive and trade positive. If it opens lower, where do you think your first target is likely to be? Down here. When they gap it down, so if I see a shooting star in the overbought area, and I wake up and the pre-market futures are down big, what's the first thing I'm going to watch on my positions? If I've got positions that are opening lower after a sell signal, close them out. It's much better to close out and sit in cash all day to wait to see what you want to be doing next, or all week, or all election time. Indecisive, 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 bearish left-right combo. That's the nail, final nail in the coffin. So the biggies, nothing in Zoom right now, even though it held up reasonably well. No direction. Amazon, no direction. Let's make these bigger. Indecisive trading, you're not quite sold area and you're still trading below the T line. Apple. If you have been short, you stay short until you can get back up above the T line. So they're all going to look the same because all the biggies are selling off. Netflix, ever since it closed with a left-right combo below the T line, you stay short. And Tesla, just nothing there. Which direction is Tesla going right now? Obviously sideways. Which way is the market going? Obviously down. Is there any reason that you would want to hold on to Tesla? None. Remember, you're in the business to try to make money for your account. And when you can look at a chart and say, there's nothing there, Ian, the market's going down, that's just telling me I shouldn't be here in a chart that looks like this. Roku, absolutely flat for the last 2 weeks. Which direction is this going? No idea, but it's not really going anywhere, so I don't have any advantage to be investing in Roku and NVIDIA. Kind of the same scenario. If you happen to have gone short, you just stay short with the idea that you're sitting on the 50. Your stochastics are almost getting to the oversold area, so you start watching from this level. So in this type of market, not a whole lot to be enthused about. Might be in a big wedge, which is just kind of the illustration that there's no decisive buying or selling going on, probably until the election is over. Then everybody can make their decisions. Gail, hang on to your individual requests until I tell Jim to do the double line. That way we'll go a little bit faster. Okay, so there are some good charts. CODX did a pop-up off of a Harami gap up through the T-line scoop type pattern. That one you keep an eye on. Who wrote this? He's right in. Here's another one, AXGT. It's in the $4 area. But you can see the doji gap up through the T-line, through the 50 and through the 34, off the 200. That's got some viable price move. Oh, you hit send. Man, I hate when that happens. QDEL. Nice J-hook pattern setup. Good option trade. ACAD. There's your bobble breakout. So even in a market that was sold off, well, what was it, 800 points or so today? Wow. There are charts out there that make bullish sense. There's your bullish doji sandwich J-hook pattern on ARNA. QDEL was right before. Vivo. There's a nice J-hook pattern setup with a bullish engulfing followed by a doji sandwich through the T-line. If the market shows some bounce tomorrow, you might put on these long positions. What is that one? OTRK. No. I don't know what that is. So, the next. VIPs. Observe the obvious. The T-line's acting as support. Get ready to buy if this breaks out of this little downtrend. Cardiff. Another one that could be bought. There's your bullish Harami, the bounce off the 34 up through the T-line. Another one that could bring you back up into this trend channel. And Very. Didn't do much today, but it did open lower and show you the bulls were in it ever since the open. After kind of this little buying spree here at the 50 up through the T-line. Likely target, it could come back up into the trajectory. So those are things that are going against the grain. Now, obviously, if you think there's still downside, which could possibly be until they get it back up above the T-line, you want to go kind of with the flow. So there's your hanging man bearish confirmation on GRWG. First target would be the 50, not that far away, but that's kind of a strong sell signal. Again, predicated on the fact that the market was selling off. And look what's happened here. So this is why I always say use the T-line as a indicator or a confirmation. The whole way up, it stayed above the T-line. What changed when it closed below the T-line? Where's the next likely target? Back probably at least to the 50. So that's why the T-line is such an excellent example or indicator to tell you what's going on for when there's been a change of investor sentiment. Look at the evening star signal on GameStop. Been a good strong stock for months. Now you've got a sell signal. Where's your targets? Here or here. Look what it's telling us that this might be getting ready to go short. Doji, 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 doji. Now you've got a bearish kicker signal down through the bearish kicker type signal down through the T-line. That one can be short or shorted. Fine. There's your bearish best friend signal off the T-line. So This is why when you see the comments say this is market conditions where you want to have both long and short positions in the portfolio, is because things look like they were rolling over, number one. Number two, with the indexes trading below the T-line, you're still going to have some of your bullish charts continue with their uptrend, but they might be slowing down. So if you're closing out long positions with the market indexes below the T-line, you probably shouldn't be looking for more long positions. You should start rolling those funds over into short positions. Jake, no, that one just started. That was, I think, that just did the signal today. Barry's kicker, so, or not kicker, Barry's best friend. Did I do play Dave and Buster's? Yes, so there's another evening star signal with a gap down, closing right on the T-line. If this one opens lower, you want to be going short. And the cruise lines, look what happened on Norwegian. Bearish kicker signal. See the wedge type formation. That might be a strong enough signal to break this downtrend, give you, or break the bottom of that trend, give you more down. Explain best friend on, oh, that was on Vine. A best friend signal is a doji gap down. Your best friend bullish signal is a doji gap up. That doji represents indecision. That gap in one direction tells you they've made a very strong decision going one way or the other. Yes, lots of bearish best friends, which is a good sign that there's a lot of stocks out there that you want to get ready to go short. Here's a bearish doji sandwich through the T-line. What's that imply? You had started seeing the selling. Now you have the confirmed selling. I'd look for at least the 50-day moving average, if not more. DXC, kind of a gap down. And what's the implication on this trend? Been failing at the 250 or at the 200. A lot of people ask, well, don't gaps get filled? They probably do, but we're not worried about that if we're buying. Now, at least now it becomes a target to say, all right, maybe they're coming back to fill this gap. If Vine also had bad earnings, yeah, 2 plus 2. Is Vine a flutter kicker, or does the doji have to be in between? It has to be in between. It's usually a doji that has gapped down below the previous day's open and did a doji. That's just a doji harami, which also implies that the buying has stopped. What did you want to know on DXC? If that one has the implication, it could be coming back down into this area. Goose, we did. Goose went from being a buy to there's your left-right combo to being a prospective short. So where are your targets on this short? Well, we can see the 34 might be a target. The 50 might be a target. Wouldn't think that this could be a target. This gap to fill right here could be a target. Or you can put what everybody else would be watching, your Fibonacci retracements. So if you start here and you go to here, that means we got one target, another target, maybe a target right at the 50, another target. So we're not looking at these for that's where they're going to go. we're looking to see if they get to one of these levels and do a candlestick if they get to one of these levels and do a buy signal, then we know that's probably the level they're starting to buy. Okay, let's see. What else do we got here? We did Goose. Penn. Penn is probably not as good a short because we're already in the oversold area. There's probably better out there. And Ramp is a big evening star signal. And where did this occur? Number one, look how far away it moved from the T line. Number two, you could probably pretty much draw a got it right up here at the top of this. So what's that imply? If this opens lower after failing up here, maybe we're coming back down to the bottom of the channel, which seems to be the 50-day moving average. American Express. Now there was your bearish flutter kicker signal. Again, the flutter kicker signal opens below the previous day's open, does a doji, and then opens lower. If you took out this little flutter, you basically have a kicker signal, which means there's a lot more downside. And Reggie, if this opens lower, what do you got going on? Your bearish doji sandwich, which tells you pretty much you have a double top. Look for the next targets, the 50, maybe even lower. Same scenario on TXG. If it opens lower, where do you think the next target will be? Right down here toward the 50-day moving average. So the important factor that has always become evident to me, even though I'm hoping that some of my longs are still going to move higher, as soon as I see that sell signal and a close below the T line, I've got to get my thinking around very quickly. That any long positions are starting to look weak, get ready to close them out, and moving those funds to short positions. That's, again, the most powerful aspect of the T line is if investor sentiment is getting squeamish enough that it's closing back below the T line, that means any negative news is going to make you have a higher probability of pushing that downtrend even further. So with that, are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. Hold on for a second. I got to figure out. Well, the lettering was kind of light, and it's because my glasses are so dirty. Okay. LI, nothing of any great consequence here. I don't know what to tell you on that one. What was the question? Buy on? No, I wouldn't be buying this one just yet. You need something more compelling, especially breaking through this level right here. CHRW, short, I would stay short. Use the T-line as your stop. Okay, I got stopped out for profit today with a stop just below the 20. It hit the 20 and bounced all the way back to the T-line. Should I have waited near the end of the day to make a decision? I would have probably been, I don't know where the 20 is on here, but I would have probably been a little bit more aggressive and had my stop just below the T-line. Now it's come back up to the T-line. So the other side of the coin is if you got stopped out, doesn't mean that this is a good chart to get back into. You got a lot of selling going on and your stochastics are up here. I'd probably just say, all right, I got stopped out. Let's go on to something else. Jemiah, that's almost a meeting line. Notice how they opened here and closed here. I'd have a sell stop just below today's low or the halfway point of this candle, because logic says if they come back down through there, the profit taking has started. Super Tire, J-hook, fry pan bottom, about to break out. Is this a buy? What color was? Yes. I would probably, just to be safe, put a buy stop just above today's high. Just to kind of confirm that breakout. Rite Aid, what do we want to know about Rite Aid? Buy. You could buy this one on positive trading using the T-line as your stop. ELPL. No. ERPL. ERPL. Nothing yet until you see a confirmation of a J-hook pattern setup. Matador, still an absolute nothing chart, JB. Have no idea which way this is going. I'd be someplace else. Beyond Meat, just stay short. Ever since your bearish left-right combo, once they couldn't get back up above the T-line, I would have been going short on this one. OSUR. J-hook type pattern, you could be buying this one. ERPL, I don't know if it's a good long-term prospect or not. Right now, I wouldn't be long or short. I'd wait to see what they're going to do here at the T-line. Pin interest, that you stay long, but you do have a bearish engulfing. Put your stop at the just below the T-line. It shouldn't come back down through there. Sono, if you're long, it has to open positive. I'd have a safety stop at today's open. Worthington, that one you can get ready to go short. That doji gap down, bearish best friend. Doji got a lot, as long as they're below the T-line, they're going to be selling this one off. And Pfizer, that's if you're long, you can stay long. It's just not going to make you very much money. DFS. Boy, that's a toughie. All you can do here is stay long as it stays above the T-line. PayPal, that one too. You could go short on this if it opens lower and trades below the 50. Looks like you'd be in a trend channel. The target coming back into this area. We did BNTX. This one you can short on weakness from here. What percentage of the time would you say a stock moves in the correct direction it opens? Well, with it coming out of a candlestick buy signal situation, there's a good probability, and I don't know what the percentage would be, but it's a high percentage. That's what we're looking for after a candlestick signal. We're looking for something to start showing it's confirming the signal or confirming the bearish signal. So it's a high percentage. I wouldn't be able to put a number on it, but remember, there's a bunch of there's 4 different quadrants that if the market opens higher and your stock opens higher, there's an extremely good probability it's going to move higher. If the market opens higher and your stock opens lower, if it comes back up through the previous day's the previous day's close, creating another green candle, it's confirming the signal. And then if the market opens lower and your stock opens higher, a good probability it's going to trade higher, but you don't need to jump in it just yet until you see what the overall market is doing. And then the 4th quadrant is if the market opens lower and your stock opens lower, you're probably not wanting to get into it, not moving in the right direction. But Linda, the reason we're using candlestick signals and looking for the confirmation is because they create extremely high probabilities that the price is going to move in the direction you expect it to. What happened there? Something. I don't know what I did. So we're back on BNTX, AMD. Done something wrong. That's just still a nothing chart. You're in a wedge. I wouldn't be long or short. There's better places to be trading. And CNX, another nothing chart. Just moving sideways. Farfetch, that one, if you're long, you stay long as it stays above the T-line. I have a safety stop just below today's low. AMD Doji sandwich. You still kind of, you'd have a Doji sandwich. You'd have almost a McMuffin, but you still had to break out through this level to want to see anything active on this chart. What's happening where this is CLNY? That's a nice little J-hook pattern. Low volume, low price, but that's a good chart. Top below today is low, which would also be the T-line, yes. It seems like I'm getting whipped around a lot. That's, yep, down September, but first 2 weeks of October, flat, then down again. Is this just life in the big city? No, Keith, you got to look at what your probability factors were. Got it down, then up, then down. should have been relatively short here. So this is where I kind of, I want to say, fine-tuned my candlestick analysis, is what happened up here at the top. Sell signal, bearish engulfing. Morning star signal. Some little shooting stars still heading down. So right now, I know I should be more long than short. Over here, when it headed up, I'm sorry, I said that backwards. I should be more short than long. Over here, I should have been more long than short. EXC, another one you can probably go short on the basis that it might come back. Remember what happens when they come up through a resistance level, they come back and test it to see if it's going to act as support. Buy EXC, no. I probably wouldn't pay attention to it on the buy side until now it comes up through this level, because you've just gapped down today. And Netflix, 2 dojis and stochastics to turn. Can it be long? Not yet. Not until you see the buyers have taken control. And that would mean to me waiting for it to close above the T-line. So just because it's setting up, I would rather buy on the confirmation of that setup versus anticipating it might be setting up. CNET, another one where you definitely need to see this open positive to stay long. And Barnes wouldn't be long or short this one. That's stuck sideways. Both up after hours, all right, that makes different scenarios. You got to see what they do on the open. What am I looking at? Duck. Not found. Momo, kind of a fry pan bottom. You could buy on positive trading. You're just going to have to watch to see what happens once it gets to the 50-day moving average. Chegg. Yeah, if this one gaps down tomorrow, you'd have a bearish best friend setting up. OSUR, no, not too late to buy. That's just starting. That's just done your doji sandwich. ARKG. What are you looking for there? That's a kind of a nothing chart. Probably wouldn't be long or short. Ford, you can stay long as this stays above the T-line. Now, Ford obviously is not a great trader, but it might be a good long-term hold. Got kind of your bottoming. You got a J-hook pattern. Let's look a while. Started to get this slow, steady uptrend. So Ford would be something more to put into a long-term situation. NRED, not working. AEP, you stay long. I'd have a safety stop at today's low. It shouldn't come back down through there. Smuckers, nothing there. You can see kind of a wedge formation, so you don't really have any great movement. I wouldn't be long or short this one. And that's what will happen in a big downdraft like we saw today. It will take a lot of the charts that are apparently being influenced by the market trend. When the market sells off hard and it sells off, it still means it's being influenced by the market trend. and sometimes a good chart would now go sideways. You can come out of it and move to something better. What do we got here? Alta, you can stay short on this one. Best friend through the T-line. Not quite a best friend, but it is a kind of your hanging man gap down. So now what you want to see, it looks like it broke this level. Can't draw it straight. Yeah, you could short this one. And Tandem, you can get ready to buy bullish Harami right on the 50. Bullish left-right combo. You're right here at this breakdown or this downtrend. You could buy this one on positive trading with the expectation you're going to the top of the trend. Probability of Zoom to break down. Can't tell. Right now, wouldn't be long or short in Zoom because you don't know which way it's going. So you need more information to see whether they're doing another J-hook in this uptrend or whether they're ready to start pulling it back. We did this one early, Philippe. That one you stay long. CMA, you stay long, use the T-line as your stop. NJR, that's a nice J-hook pattern breakout. New Jersey Resources, all right. The left-right combo, the wick is lower than the golfing candle. The wick doesn't matter. In this case, it's still a good bullish signal. Use the T-line, so your next prospective target is the 200. UVXY. It's not quite a best friend because it didn't gap up above but it's still a doji gap up. But you don't have a real dynamic trend. So if you're buying, you want to make sure it gets through the 50. So I probably wouldn't pay attention to this one until after it gets up through the 50. ADLX, Harry, that's not working. AXL, this one has to open positive and trade positive to stay in it. Use the T-line as your stop. Okay. Need to watch to see what the pre-market futures, this could be coming back down. Again, not surprising. We might be an indecisive wedge because the poll numbers will change as far as the election. The virus numbers will change. So nobody's real confident and nobody's ready to sell off the market with any great magnitude. So we might be still in just kind of a sideways wedge. So with that, we'll see everybody bright and early tomorrow morning. We'll see you then.